Liquidity is debasement of currency. Debasement of currency is the driver of crypto prices and all asset prices. So it all lies ahead this year. What's interesting is the discussion around when the cycle ends. So I think we've got a longer cycle. It will almost certainly outperform the last cycle and looks more like 2017 to me, which, guess what, was a Trump cycle.
The last time Trump was in the White House, the crypto market skyrocketed. Now, history may be repeating itself, but on an even larger scale. That's the latest take from Raoul Pal, CEO of Real Vision, who believes the crypto market is right on track in this cycle. He describes the current phase as the banana singularity, where things start getting crazy. Pal points out that this cycle has more in common with 2017 than 2021, which is key for investors. In 2017, Trump called for a weaker dollar, and China ramped up economic stimulus, two factors that triggered a massive crypto bull run. With similar conditions emerging today, Pal anticipates a comparable surge. Unlike in 2021, when liquidity dried up early, this time the market is just finding its bottom. That means the bull run could extend all the way into early 2026. Watch the full video for Raoul Pal's in-depth breakdown of the crypto market's future. Also, if you enjoy listening to crypto-related content, please show your support by liking and subscribing to this channel by following the link in my bio, and get access to my free daily crypto updates and expert predictions direct to your inbox. Each newsletter contains on-chain data, forecasts and expert predictions. All of this is available free of charge. It only takes a moment to sign up and you can always change your mind later.
Now back over to Raoul Pal.
Where are we now compared to what your expectations were back in November, December when during our last interview?
In terms of which? Crypto?
General market, crypto. General market sentiment, from a macro perspective as well. Has that changed your thesis in any way? Has that altered it in any way? More bullish, less bullish?
No, it's exactly where I think it is, which is we're now in the part of the cycle which tends to be what I call the banana singularity, when things start to get really crazy. We've seen that with the Trump coin and whatever. What we're still missing is the massive liquidity injections that should come into the market from central banks and governments. We've got the US will be draining what's known as the Treasury General Account, which is their checking account. That will increase liquidity significantly in the US over the next few months until they negotiate the debt ceiling. I think there is a broader deal that's going to get done with the dollar and China, and I think the US is been using the strong dollar as a negotiation point with China. China can't stimulate its broken economy right now until the dollar weakens, because if they stimulate, they'll break the peg against the dollar, which they do not want. They don't want capital flight. So you need the dollar to come down, and then the Chinese can stimulate and help the world economy recover. The US knows this, and it's a tool for everybody. If Chinese economy starts to recover, they'll buy US treasuries. So we're at the really interesting point in the cycle where all the debt has to get refinanced, all the games have to get played, the dollar needs to weaken, rates will come down, and everyone will refinance their debts by adding liquidity. What does that all mean? All of the macro stuff, all it means is number go up. Liquidity is debasement of currency. Debasement of currency is the driver of crypto prices and all asset prices. So it all lies ahead this year. What's interesting is the discussion around when the cycle ends. So a lot of people have PTSD because of the last cycle, and that finished early. It peaked in April, went down 50%, up, made a new high, and then kind of just failed, right? That was driven by the fact that the business cycle, the ISM survey, peaked in March 2021. Why? Because we had that snap crash from COVID and then snap back up, and the business cycle peaked, as did liquidity. So the cycle peaked. So as it went down again, tried to come up again, but kind of failed because there was no follow through because the business cycle had peaked. This time around, the business cycle is actually still below 50, which is the slow growth zone, not recession zone, but slow growth. And all the forward-looking indicators say the US economy and the global economy is about to get a lot stronger. And so we're nowhere near peaking. In fact, we're only just bottoming. So the chances are that we might even go through all the way till Q1 2026. So I think we've got a longer cycle. I think it will almost certainly outperform the last cycle and looks more like 2017 to me, which, guess what, was a Trump cycle. And we entered the Trump cycle last time with tariffs and, oh my God, this and that. Rates were going up and the dollar was going up. Trump came into office and immediately said the dollar's too high. The dollar came lower. China were also near recession. They had to stimulate. They spent the rest of the next 2 years stimulating. And that's what drove the crypto cycle in 2017. So we've got an incredible similar setup to 2017, which you were around for that one. It was bullish as hell.
So for people that weren't there in that cycle compared to the last one, essentially, if we see a similar cycle, then we'll probably see it go into November.
Yeah, or maybe, as I said, it could even push into, that
early.
cycle, alts peaked in Jan or Feb, right?
They did, yeah.
Thanks for watching. Don't forget to subscribe to access my free daily crypto updates and expert predictions direct to your inbox.